Good morning, everyone, and welcome to the Quantum Leap Morning Leap session for Monday, April the 16th, 2018. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets. And then we create our scenarios, hypos, trade plans, whatever you want to call them. But basically we create two main hypotheses based on who takes control, the buyers or the sellers. And then we have a third and fourth hypothesis, which is our expansion or trend type days. It's good to be back. I've been haven't had a voice for over a week now. I'm still got congestion, so if I start coughing, just bear with me until I get over this whatever I have. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. So we're reviewing Friday's action. I think the market was definitely on edge, waiting to see what's going to happen with the Syria and whether or not there was strikes. It looks like Trump was smart enough to wait for the weekend and did the strikes on Friday, late Friday, or sorry, early Saturday morning. But in terms of the Friday market, we opened auction out of range. We rotated back inside of the range, basically went sideways, fighting the low of Thursday's RTH session, and then coming into the afternoon, they started to sell it off, came down to the naked VPOC, got a nice Mr. Sneaky setup and a rotation back up into where they fought most of the morning. It was a tough day for me. I got myself in a hole and ended up digging myself out, but did not end up making any money, even though I got back to break even. Taking a look at the macro, let's do the news first. I'm going to be a little bit discombobulated here just as I get back into a groove with these sessions again. 8:30, we had core retail sales, came out as expected. New York Empire State Manufacturing was a miss, but retail control and retail sales, were pretty decent. Again, we're right into the thick of the earnings seasons again. So earnings, I think, is going to lead. Today, there's not today there's not a lot of news, but we do have a lot of Fed speakers today. 10 o'clock, we've got business inventories and NAHB housing market index. 11:30, we've got the 3-month bill auction and 6-month bill auction. Then at noon, we have Kaplan speaking from the Fed, and then at 1 o'clock we've got at noon as well we got Kashkari speaking, and then at 1:15 we've got Bostic speaking. 4 o'clock we've got U.S. foreign buying of T-bonds and overall net capital flow and the TICnet long-term transaction. But really, the news today is going to be, about the Fed speakers. I don't think we're going to get much more in terms of scheduled news other than that. Of course, there's headline news with all the talk coming out last night with Comey's interview on CNN. Each day, I'd like to take a look at. Let's not go there yet. Let's take a look at the COT report because I still find this interesting. Commercial paper continues to get further net short. In fact, it's the largest net short position I've seen. Although the large spec and the retail continue to be net long. Now, notice that the retail is now more net long than large spec, and I'm expecting this to continue as the large spec will likely reduce their exposure to the upside since the commercial paper is very much net short now. So just I don't think the top is in yet, but we're ready for a breakout, and whether it's a false breakout to the upside and a move down is still to be determined. Taking a look at the macro, I always like to start my day taking a look at a simple candlestick chart. I use a 9 EMA and a 20 SMA. It's not that I'm trading with these. I'm using them to determine how strong the trend is in terms of the various time frames that I'm looking at. I start with the monthly and work my way down into the intraday. And you can see on the monthly, we've had a very strong trend, good slope, good separation. We challenged it in February. March, we took it back, and so far in April, we're holding, but we're sitting right on top of that 9 EMA, and we have lost some slope and separation, but it is very minor, and this can easily explode to the upside. As we move down to the weekly, we still are below the 9 and the 20, but we're coming up to test this 9 from below. There is a naked cross on the weekly up here at 27.0575. If the breakout is to the upside, the target is going to be that 27.20 area, and I'll show you why as soon as we get into the structure of the market. As we move down to the daily, you can see that we have gotten back above the 9 and the 20. We're in a serious amount of compression, and we have a ascending triangle right now. And usually the breakout on an ascending triangle is to the upside. So watch this 2681. That will be the breakout of the ascending triangle, and again, the target's going to be towards that 2720. As your main target above. As we move down into the intraday and go to the 4 hour, you can see that we have started a nice, fairly strong trend up on the 4 hour. During the last 3 trading sessions. So we are seeing a move up and a sustainable trend on the 4 hour. Going to the 30-minute. You can see that we opened at the week open is 27.73 and a quarter, and we've basically been fighting that level, this morning after going down and having an overnight low down at 26.6075. But they took it back, and so far we're holding above the 9 and the 20, and just going down one more to the 5-minute. Don't freeze up on me. And looking at the 5-minute, you can see that pretty flat-lined. Again, fighting the open of the week, but we're above the 9 and the 20, and we're starting to get a trend to the upside. So looking at the structure of the market, there's two things I want to point out that are very important. First of all, the overall microcomposite VPOC shifted up. It was down below at that 13-14 area, and it has shifted up to 2657 on the longer time frame microcomposite, as well as the 15-day. The smaller time frame we've compressed here, and the VPOC on this time frame and the longer time frame has now come together, and we've accepted that 5650 for the time being, and we're looking like we're going to get this breakout. The value area for the last 15 days, the value area high is right here at the 72. So we need to hold the 72 to continue the breakout. And the the key area above is going to be this 84.50. If we can get above that, then I think we've got some, pretty free and clear area to go up and test the mid of this gap zone, and that's in the 27.05 area. And the target being above is the last price they tried to hold before they gap down, and that's at the 27.19 area, 27.1875. So between the 18 and the 20 is going to be our major target above still. If we can't hold above the 72, likely going to come back and test that 56. At least come down and test the the low of the overnight of the 60.75, but more likely come down to the 56.75. And any break below the 40 becomes our key line in the sand below. Anything below that, I think the breakout to the upside is a false breakout, and we're likely to move all the way back down into the 24, if not coming down and having a trip through value down to the 2609 area. So overnight inventory is pretty much net short, although we did get a VPOC shift up. The VPOC shift was down here at the 67.50. It's moved up to the 73.75. And basically, again, fighting that weak open at the 73.25. And if we can stay above that, look for them to go and take out that overnight high at 77.50 and see if we have a true breakout above that 84.50. So looking at our levels, our week open is 73.25. Our overnight high is 77.50. Our overnight low is 60.25. And basically, I've got all the levels here. Watch the 75.50 area. That is our year open. So above that should give us a release to take out the overnight high. And if we get above the 80.50 range high from Friday, the first resistance is going to be our key line in the sand above, which is that CLVN at 84. And above 84, target 91 and 98.25. Our daily ATR is running, our 20-period full session average true range is running at 54.33. So at 26.60.25 plus the 54.33, our upside ATR, daily ATR is all the way up at the 14.50. And off of the overnight high of 26.77.50, our downside daily ATR target is all the way down at 26.23.25. So what does that mean? It means that right now we have range capabilities without going beyond the 20-period average true range up into the 2700s and all the way down to the low 2600s. We are still with this huge volatility. We are continuing to push up, on the retail news. We're now above the year open. So what am I looking at in terms of hypotheses? I'm looking for an open auction in range, out of value. I'm looking for a move down to test the value area high down here at the 66.25, possibly come down to the overnight low, but somewhere between the 66 and the 60, I'm looking for responsive buyers to step in and rotate us up through the overnight high, chop at the 80.50 and get the breakout today. And I'm looking for a push up into the 91.75 to 99.75 if we get above this 84.50 key line in the sand. That is hypo 1. Hypo 2 is a failure to break out of and hold Friday. So I'm looking for open auction out in range, out of value, a push through, making a new, taking out the overnight high. We're going to put new overnight highs in here as we move forward, and coming up into between the 80 and 84.50, and failing to get above that CLVN and key line in the sand, and a rotation back down into balance down here at the 56.25, and basically go sideways and start to base there again. That is hypo 2. Hypo 3 is an open drive, a push up right away into the 84.50, maybe even opening above the 80.50. We still have 32 minutes to go before the RTH session, so we could get a gap and go day. But hypo 3 is a strong breakout, push up into the 91 to 95, chop here, get continuation, and move up and break into the mid of the gap zone up here at the 27.05, stall, and then push up into the 14 to the 18 area. And get a gap and go and a breakout of this compression that we've seen. And this could get some real legs and actually go all the way up into this 31 to 33 area. So just if we get into a trend day, don't fade this trend. Don't fade any open drive today, because it's going to fuel a lot of shorts to cover. And when it does, it's going to have very little rotation back down. Hypo 4 is an open auction in range, failure to get above the 80.50. Sellers take control early, move us down into the 56 area, chop around down here, and then fail and come down and test this 40 with a possible break below down to test the month open. And then a base from there, and basically closing down below Friday RTH range. So that's what I'm looking at in terms of the Globex. I'm sorry, the hypotheses for the RTH session. Did we just put in a new high? Yes, we just put in a new high. We are creating a weak Globex high here in the 77-75 area. So it looks like the buyers are just still taking control. With all the stuff going on, this market just will not seem to find any weakness. And remember that it is earnings this week, so check your earnings before and after the market to see how they're coming out. Quick look at gold. Gold made that breakout that we were looking for, mid last week, and went up into the 1369. Remember that the main target above was this 1363 area. Then it failed, came down about $30, came right back into the balance, and bounced. And now we get a shift of the shorter time frame microcomposite VPOC up into the 1350 area. Key area is the 1350 to 5150. If we get above that, look for them to go back up into that 1360-63 area. If we fail to break that 51-52 area, I'll move back into the 44 again and just more chop with gold. Any move below the 41, look for the bigger move down into the 29 again, and maybe see some weakness in gold. But right now, gold seems to be risk off and risk on, and a flight to safety right now. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.